Hey everyone, this is Mike Minter with your Market in Minutes reports, and this is a short week as yesterday was a market holiday, so it's a little late getting out to you guys. I apologize. Also, sorry for the glare in here. I'm having a little sun issue in my office today, so I apologize. But let's take a look at last week's market behavior and also some of the economic factors that went into that. It was a down week for the broad market. As you can see, the S&P was down just a little bit, but not bad, really. Dow was flat. Russell 2000, so small caps popped 1.17%. That was good to see. NASDAQ had a rough week, so tech obviously got hit the hardest, which is what really kind of tanked the S&P last week. As you can see, that component of the broad market is what really was dragging it down. Flipping over, though, to the foreign markets, the EFA, MSCI EFA was up really nicely, so that was good to see. So all in all, really not a bad week. It was kind of mixed, but the overall broad market was down just a little bit. Year-to-date, still very strong, as you can see across the board. Dow up almost 3%, S&P up over 5%, Russell 2000 now firmly in positive territory, and NASDAQ up 5.18%, and the EFA. So, overall, this has been a stellar year from start to end of last week. So really not a whole lot to complain about. It's been, a little rocky over the last couple weeks, but other than that, it's been a really strong market. Let's take a look at some rates. So they did edge up just a bit last week. Nothing crazy, but the 30-year Treasury now at 4.43, 10-year Treasury at 4.26, 2-year Treasury at 4.58, and the 30-year mortgage now at 7.47. Edged up a bit, so not the greatest for home buyers. As we've seen, the home buying market is kind of a tough place to be right now, but hopefully we'll get some relief on that later this year. So let's talk about some of the factors that led to a little bit of a drawback last week. So markets were quiet Monday but opened lower Tuesday in response to that January inflation report that showed higher than expected consumer prices. But stocks regained some momentum on Wednesday and then rallied on Thursday, despite disappointing reports on both retail sales and industrial production for January. And the news of higher than expected wholesale prices on Friday put investors back on edge and kept stocks from ending on a positive note. So the weekly loss broke a 5-week winning streak. Again, as we saw, it was just a slight pullback, nothing to be concerned about at all. So let's take a look at some of the economic factors that went into that. And it was all about inflation. I feel like a broken record because that's what it's been for the past year and a half, basically. But inflation data was a big driver of markets last week, with January's numbers coming in at 3.1% compared to a year prior. It was cooler than December's 3.4% year-over-year gain, but warmer than the 2.9% consensus. Again, just a little bit higher than consensus. Not a big deal, but the jittery investors focused on the warmer than expected part and not the positives. So with the consumer report closely followed by disappointing inflation news on the producer level, attention quickly shifted to the Fed, of course, and what's next for interest rates. I don't think this is any surprise, but while the Fed has indicated short-term rates may trend lower this year, the January inflation reports support Fed Chair Powell's recent comments that the Fed is in no hurry to cut rates. We already knew that. He's playing this very cautiously in his tone and comments, which is to be expected. I still think that we are on track probably for rate cuts later this year, but that remains to be seen. I'd be shocked if we didn't see something, but there you have it. So what's on deck this week? So we've got some key economic data, Tuesday leading indicators, Wednesday FOMC meeting minutes, and Thursday jobless claims, existing home sales, and the U.S. Fed balance sheet. So not a jam-packed week by any means, and either on the reporting side either. So earnings, we have Tuesday Walmart, Home Depot, Palo Alto. Wednesday, NVIDIA. That will be a very closely watched earnings report because NVIDIA is literally the hottest stock on the planet right now. Seemingly no end in sight, but as we all know, there will be an end to the run at some point, but this will be an interesting one to watch. Thursday, Intuit, Booking Holdings, and Friday, Berkshire Hathaway. That is the Warren Buffett-led company. So that rounds out this week, and as usual, we will report back to you next week on what occurs this week. So hope you guys enjoyed that and had a nice, if you did have off yesterday, had a nice day. I know the markets were closed and we were off, so it's a nice little day off. As always, contact us if you have any comments or want to discuss your financial situation or investing needs. We would be honored to speak with you, whether you are a client, prospect, or otherwise. And go ahead and hit that subscribe button down below. We'd love to have you as a regular subscriber and viewer of our videos as we try to get those out on a regular basis. Okay, guys, thanks so much for your time, and I will talk to you soon.